Chapter 9, Process Costing. Managers need to assign costs to products to facilitate external financial reporting and internal decision-making. So in this lecture we're going to discuss the absorption costing approach to calculating product costs as process costing. Job order and process costing are similar in that they both deal with assigning materials, labor, and overhead to products as a way to calculate the unit costs. Both systems use raw materials, inventory, work in process, inventory, and finished goods inventory. The flow of costs is similar but not exactly the same in both systems. Process costing is best suited for the production of a single product that is continuously produced for a long period of time. Remember the mixing and bottling of Coca-Cola from the earlier lecture. Job order costing is best suited when jobs are produced as discrete projects, such as building a house. Process costing accumulates costs by department, while job order costing accumulates costs by individual jobs. Process costing uses a fundamental document called a department production report, while job order costing uses the job cost sheet. In process costing, unit cost is computed by department, while job order systems, unit cost is computed by job. While there are similarities between the two systems, there are also significant differences. So let's do a quick check. Can you identify the most likely circumstances where a process costing system may be used? A, B, C, or D? Here you go. Similar and produced continuously. A processing department is any unit in a company or organization where materials, labor, or overhead are added to the product. The output from a processing department is homogeneous, that is, they all appear the same. Products in a process costing environment typically flow in a sequence from one department to another. So, let's do learning objective number 1. Recording the flow of materials, labor, and overhead through a process costing system. The flow of costs through the manufacturing accounts is basically the same for process and job order costing. There is a key fundamental difference between the two costing systems. There is a key difference between process and job order costing systems. Job order costing systems trace and apply manufacturing costs to jobs. One work in process account is often used to accumulate costs for all jobs. Individual job cost sheets serve as a subsidiary ledger. In a process costing systems, costs are traced to departments that process the goods. In some companies, there may be several processing departments that goods must pass through to become finished goods. A separate work in process account is maintained for each processing department. Material, labor, and overhead costs transferred from one department's work in process account to another department's work in process account are called transferred in costs. So let's look at the flow of process costs through the T accounts and related journal entries for a manufacturing company that has two departments, Department A and Department B. Direct materials can be requisitioned for use in both Department A and Department B. These direct materials are likely to be different in nature. direct material costs are debited to the appropriate departmental work in process account, depending upon where the materials were added to the production process. The raw materials inventory account is credited for the corresponding amounts. The journal entry that shows the requisition of direct materials for use in processing departments A and B is to debit the processing department of the direct materials requisitioned and credit raw materials inventory. Notice that the direct materials are placed into a separate work in process account for each processing department. Direct labor is transferred from the salaries and wages payable account into the work in process account of departments A and B, depending upon where the individual employee worked. Direct labor costs are debited to the appropriate departmental work in process account, depending upon where the labor was added to the production process. Salaries and wages payable is credited for the corresponding amounts. Here is the journal entry to place the direct labor into the work in process inventory of departments A and B. Manufacturing overhead is applied to each processing department based on a predetermined rate for each department. The predetermined rate does not have to be based on the same cost driver for each processing department. Manufacturing overhead costs are debited to the respective departmental work in process accounts. Manufacturing overhead is credited by the corresponding amounts. This is the journal entry we use to apply overhead to the work in process inventory of each of the processing departments. The cost of units complete as to the processing in Department A are transferred into Department B for additional work. Department B has incurred additional costs to work on units that were in process at the beginning of the period. The transferred in costs from Department A are added to the manufacturing costs incurred in Department B. To transfer the costs, we debit the work in process inventory in Department B and credit or reduce the work in process inventory in Department A. Here we see the transfer of completed goods from work in process Department B into finished goods inventory. The costs transferred represent the cost of good manufactured. The necessary journal entry is to debit finished goods inventory and credit work in process inventory in Department B to transfer finished production. Once we sell finished goods, we debit cost of goods sold and credit finished goods inventory. When finished goods are sold to the customer, we will debit cost of goods sold and credit finished goods inventory for the cost of sales. Equivalent units are the product of the number of partially completed units and the percentage completion of those units. Equivalent units need to be calculated because a department usually has some partially completed units in its beginning and ending inventory. These partially completed units complicate the determination of a department's output for a given period and the unit cost that should be assigned to that output. The basic idea behind equivalent units is quite easy to understand, but the computation of equivalent units can become very complex. Here we can say the two half-completed units of production are equal to one complete unit. Using this logic, we can say that 10,000 units that are 70% complete are equivalent or the same as 7,000 complete units. So let's check. For the current period, Jones started 15,000 units and completed 10,000 units, leaving 5,000 units in process, 30% complete. How many units of production did Jones have for the period? Here we are. 11,500 is the answer. 11,500 equivalent units. 10,000 units plus 5,000 units times 30% equals 11,500 equivalent units. Equivalent units may be calculated using the FIFO method or the weighted average method. The weighted average method is included within the main portion of the chapter and is covered next, while the FIFO method is covered in the appendix and later in this presentation. So let's do learning objective number 2. This is to compute the equivalent units of production using the weighted average method. When we use the weighted average method, we make no distinction between work done in the prior period and work done in the current period. We blend together the units and costs from both the prior and current period. We determine the cost per equivalent unit by dividing costs for the period by the equivalent units of production. The equivalent units of production for a department are the number of units transferred to the next department or finished goods, plus the equivalent units in the department's ending work in process inventory. In today's economy, direct labor costs are becoming small when compared to materials and overhead costs. Automation is one of the causes of this shift. As a consequence of the change in volume of direct labor costs, many companies combine labor and overhead costs and refer to the total as conversion costs. That is, these are the costs incurred to convert the direct materials to a finished good. We will make some extensive use of the notion of direct materials and conversion costs in the remainder of this presentation. Let's look at an example of calculating the cost per equivalent unit for the assembly department of Smith Company. The assembly department is only one of the company's processing departments. Notice that the department started the month of June with 300 units that are 40% complete as to materials and 20% complete as to conversion, which is direct labor and overhead. During the month, the department started 6,000 units into production. During the month, 5,400 units were transferred out to the next department. At the end of June, the department had 900 units, 60% complete as to materials and 30% complete as to conversion. Since the department began the month with 300 units and started 6,000 units into production, we have 6,300 units to account for. Of these 6,300 units, 5,400 units were completed and transferred out, and 900 remain in the department as work in process inventory. The first step in calculating the equivalent units is to identify the units completed and transferred out. In the case of the assembly department, there were 5,400 units completed and transferred out. We know these units are 100% complete as to materials and conversions. The second step is to calculate the equivalent units as to materials and ending inventory. We know there are 900 units in ending inventory that are 60% complete as to materials. So we know that there are 540 equivalent units as to materials in ending working in-process inventory. For materials, we add the units completed and transferred out to the equivalent units as to materials. For direct units, as to materials of 5,940. The third step is to calculate the equivalent units in ending inventory as to conversion. We know there are 900 units in ending inventory, in ending work in process inventory, that are 30% complete as to conversion. So there are 2,270 equivalent units as to conversion in ending inventory. For conversion, we add the units completed and transferred out to the equivalent units as to conversion to arrive at a total equivalent units as to conversion of 5,670 units. We always follow these three steps when using the weighted average method. We can restate the three-step process more quickly by saying that when using the weighted average method, equivalent units of production will always be equal to the units completed and transferred out, plus the equivalent units remaining in work in process inventory. Sometimes there is a preference for a three-step approach, while others prefer the shortcut approach. So here's a chart showing the computation of equivalent units as to materials. Remember, we started with 6,000 units into production this month. The equivalent units of production equals the units completed and transferred out, 5,400 units, plus the equivalent units remaining in work in process. Here's a similar view for conversion costs. Again, the key to understanding this chart is that units started and completed this period. So now let's do learning objective number 3. Compute the cost per equivalent unit using the weighted average method. We used this information to calculate the equivalent units earlier. Here we have added the dollar amount in beginning work in process inventory and the material and conversion costs incurred during June. Let's begin the process of calculating cost per equivalent unit for June. We calculate the cost per equivalent unit by adding together the cost of beginning work in process inventory and the cost added during the period. We divide the total dollar amount by the number of equivalent units we previously calculated. We begin by adding the costs in beginning inventory to the costs incurred during the current period. The sum of the cost of materials and conversion equal the total cost to be accounted for during the period. Notice that we have 5,940 equivalent units as to materials and 5,670 equivalent units as to conversion. So let's look at the calculation of the cost per equivalent unit. We begin by calculating the cost per equivalent unit as to materials and as to conversion costs. We have a total cost of 124,740 and 5,940 units. So the cost per equivalent unit is $21 for material, with total costs of $85,000 and total equivalent units of 5,670. We have an average cost per equivalent unit of $15 for conversion. So the total cost of materials and conversion is $36 per equivalent. Okay. Now, learning objective number 4. Let's assign costs to units using the weighted average method. Let's compute the cost of ending work-in-process inventory. The first step is to record the equivalent units of production in ending work-in-process inventory. 540 units for materials, 270 units for conversion. The second step is to record the cost per unit per equivalent unit. $21 for materials, $15 for conversion. The third step is to compute the cost of ending work-in-process inventory, which is $11,340 for materials, $4,050 for conversion, and $15,390 in total. Now let's compute the cost of units transferred. The first step is to record the units transferred out to the next department, 5,400 units for materials and conversions. The second step is to record the cost per equivalent unit, $21 for materials and $15 for conversion. Third step is to compute the cost of units transferred out, $113,400 for materials, $81,000 for conversion, and $194,400 in total. Now, learning objective number 5 is to prepare a cost reconciliation report. Now we must reconcile the costs. The first step is to record the cost of beginning work-in-process inventory of $10,039. The second step is to record the costs added to production during the period as shown, $199,751. The third step is to sum these two costs for a total to be accounted for of $209,790. Computing the costs accounted for, the first step is to record the previously computed cost of ending inventory, work in process, $15,390. The second step is to record the previously computed cost of units transferred out, $194,400. The third step is to sum these two costs for a total of $209,790. Notice the two totals agree, indicating that the costs have been accounted for. Operation costing is similar to job order costing. For example, a shoe manufacturer may charge each batch of shoes for its own specific material costs, such as shoes made with expensive leather would be charged accordingly as would shoes made with inexpensive synthetic materials. It is also similar to process costing. The shoe manufacturer may accumulate the labor and overhead costs by department and assign the same conversion cost per unit to each shoe regardless of the shoe's style. So here are some supplementary notes for the weighted average method. The work of process costing calculations can be concluded in a table format with the following 5 steps with a defined color to help follow the steps. Summarize the physical flow of units is the green area. Compute equivalent units of productions, the blue area. Summarize the total cost incurred for the period and then compute the total cost per equivalent unit, which is the yellow areas. Calculate the values of completed units and ending work-in-process inventories, the peach area, and then check cost reconciliation, which is the black cells. Total cost equal total value. Now let's summarize the physical flow of units. Inputs equal outputs, inputs equal work in process, beginning work in process, plus units started. Outputs equals units completed, which are transferred out, plus ending work in process. In the weighted average method, inputs figures are identified to help check the outputs values, but are irrelevant for further calculations. Only the outputs are relevant for the weighted average costing approach. All finished goods are pooled together and valued regardless whether they were from the beginning WIP, work in process, or started in the current period. All costs are averaged out among the outputs. So let's compute the equivalent units of production. Percentages of completion for each category of product status are labeled next to the quantity to help us calculate the appropriate quantity for material and conversion. So for example, completed goods of 5,400 units would have 100% of raw material and conversion done. Therefore, the equivalent unit of production are 5,400 units for materials and conversion. For the ending work in process of 900 units, 60% completed with respect to materials and 20% completed with respect to conversion. Hence, the equivalent units of production are 540, which is 900 times 60%, and 270, which is 900 times 30% for materials and conversion, respectively. The total equivalent units of materials and conversion are then summed up for each column. The total equivalents for materials and conversion are 5,940 and 5,670, respectively. So let's summarize the total costs incurred in the period. After summarizing the cost for materials and conversion in the table in accordance to beginning work in process and incurred in the period, we can sum up the costs horizontally and vertically, giving rise total material and conversion costs of $124,740 and $85,050, respectively. Let's compute the cost per equivalent unit. Cost of materials and conversion are then divided by the total equivalent units of production of materials and conversion, respectively, to give rise the cost per equivalent unit for the respective category. In this case, material is $21 per equivalent unit and conversion is $15 per equivalent unit. Let's calculate the values of completed goods and ending work in process inventories. The values of materials for the completed goods, which are goods transferred out to the next process, can be obtained by multiplying the equivalent unit of completed goods and the cost per equivalent unit within the materials column. Similarly, the value of ending work in process for the materials can be calculated by multiplying the equivalent unit of ending work in process and the cost per equivalent unit within the materials column. So for relevant conversion costs, the same exercises are repeated within the conversion column. Consequently, we can obtain the value of completed goods or goods transferred out amounting to $194,400 by adding the relevant materials, $113,400, and conversion, $81,000 in costs. Okay. So let's check the cost reconciliation. Total cost incurred from beginning work in process and incurred during period amounting $209,700 should match with the total valuation of inventories, which was a result of adding the value of goods transferred out and the value of ending work in process. So let's look at the FIFO method. FIFO is considered a more accurate measure of cost than weighted average. It is important to be careful with your handling of beginning work in process inventory when using the FIFO method. While calculations in weighted average and FIFO appear to be similar, there are significant differences between the two methods. We will be using our previous examples to illustrate this case. So let's do learning objective number 6. Let's compute the equivalent units of production using the FIFO method. Recall this basic information from the Smith Company example. We completed the calculation of equivalent units for the company using the weighted average method. Now we will use the same information to determine equivalent units under FIFO. The first step in the accounting process is to determine the equivalent units needed to complete beginning work in process inventory, which was 180 units for materials and 240 units for conversion. Recall that the units in beginning inventory were 40% complete as to materials, so we must have to add 60% of the materials this month to complete the units. As to conversion costs, the units in beginning inventory were 20% complete, so we must incur 80% of the conversion costs this month to complete the units. The second step is to add the units started and completed during the period. 5,100 units for materials and conversion. The 5,100 units represent the total units completed and transferred out this month, less those units in beginning inventory. Remember, in FIFO we must keep track of the units in beginning inventory, started this month and ending inventory separately. The first units in inventory, beginning inventory, are the first units transferred out this month. The third step is to add the equivalent units in ending inventory, ending work in process inventory, which was 540 units for materials and 270 units for conversion. This calculation results in 5,820 equivalent units as to materials and 5,610 equivalent units as to conversion costs. Here is a visual showing the computation of equivalent units as to materials. The equivalent units of production equals the units completed and transferred out plus the equivalent units remaining in work in process. Here is a chart showing the computation of equivalent units as to conversion costs. Some of you can find this equation approach more useful than the tabular approach. The FIFO method removes the equivalent units that were already in beginning inventory from the equivalent units as defined using the weighted average method. Thus, the FIFO method isolates the equivalent units due to work performed during the current period. So let's show this via the Smith Company example. The equivalent units of material produced per the weighted average method was 5,940 units minus the equivalent units of material in the beginning inventory, 120 units, equaling the equivalent units of production per the FIFO method, 5,820 units. The equivalent units of conversion per the weighted average method, 5,670 units, minus the equivalent units of conversion in beginning inventory, 60 units, equals the equivalent units of production per the FIFO method, 5,610 units. So now let's do learning objective number 7, and that's to compute the cost per equivalent unit using the FIFO method. Returning to Smith Company as our illustration, let's apply the FIFO to our production report. The information here shows the assembly department for the month of June. Let's add information about the cost of units in beginning inventory and the costs incurred during the month of June. We calculate the cost per equivalent unit by dividing costs added during the period by the equivalent units we previously calculated. We begin by gathering information concerning the total costs incurred during June for materials and conversion. We do not include the costs associated with the units in beginning inventory. We calculate the cost per equivalent units as to materials by dividing 118,621 by 5,820 units. We calculate the cost per equivalent unit as to conversion by dividing 81,130 by 5,610. In an attempt to minimize the impact of rounding errors, we carry the per unit cost out to 4 significant decimal places. And finally, we determine the cost per equivalent unit by adding together the cost per equivalent unit for materials, which is $20.38.16, and the cost per equivalent unit for conversion, which is $14.46.17, to get the total cost of $34,884.33. So let's go on to learning objective number 8. Let's assign cost to units using the FIFO method. Let's compute the cost of ending work in process inventory. So the first step is to record the equivalent units of production in ending work in process inventory, which is 540 units for materials and 270 units for conversion. The second step is to record the cost per equivalent unit, which is 20.38 for materials and 14.46 for conversion. The third step is to compute the cost of ending work in process inventory, so 11,006 for materials and 3,905 for conversion, and 14,911 in total. Now we will compute the cost of units transferred out. The first component of the computation is to record the cost in beginning work in process inventory, which is 6,119 for materials and 3,920 for conversion, and 10,039 in total. The second component of the computation is to compute the cost to complete the units in beginning work in process inventory. Start by recording the equivalent units of production required to complete the units in beginning inventory, 180 units for materials and 240 units for conversion. Next, record the total cost per equivalent unit, 20.38 for materials and 14.46 for conversion. Finally, we compute the cost to complete the units in beginning work in process inventory, which is 3,668 for materials and 3,471 for conversion, for a total of 7,139. The third component of the computation is to compute the cost of units started and completed this period. The first step is to record the units started and completed this period, which is 5,100 units for materials and conversion. The second step is to record the cost per equivalent unit, 20.38 and 14.46. The third step is to compute the cost of units started and completed during this period. So 103,946 for materials, 73,755 for conversion, giving us 177,701 in total. So the final computation is to compute the total cost of units transferred out, 194,879. So, learning objective number 9. Let's prepare a cost reconciliation report using the FIFO method. When computing the cost to be accounted for, the first step is to record the cost of beginning work in process inventory of $10,039. The second step is to record the costs added to production during the period of $199,751. The third step is to sum these two costs for a total of $209,790. When computing the costs accounted for, begin by recording the cost of ending inventory, which is work in process inventory, 14,911. Next, record the cost of units transferred out, 194,879. And finally, sum these two costs, 209,790. Notice that the two totals agree, so all costs have been accounted for. In most situations, the weighted average and FIFO methods will produce very similar unit costs, particularly in a lean production environment. From a cost control standpoint, the FIFO method is superior to the weighted average method because it does not mix costs of the current period with costs of the prior period. So here's some supplementary notes for the FIFO method. The work of process costing calculations can be concluded in this table format, which has the following 5 steps with the defined color to help follow the steps. Use the same approach in the weighted average method. Number 1, summarize the physical flow of units, which is the green area. Number 2, we compute equivalent units of productions. That's the blue area. Number 3, we summarize the total cost incurred for the period and then compute the cost per equivalent unit, which is the yellow area. 4, we calculate the values of completed units and ending work in process inventories, the peach area. And 5, we check reconciliation, which is the black cells, and total costs equal total value. To summarize the physical flow of units, inputs equals outputs, inputs equals beginning work in process plus units started, outputs equals units completed, which are transferred out, plus ending work in process. In the weighted average method, inputs figures are identified to help check the outputs values. In the FIFO method, the same inputs equals outputs can be done because the outputs of FIFO should match with the weighted average method. Same as the weighted average method, it focuses on the outputs. It is important to note that the FIFO method, the first item on the production process, is the first one to complete. Therefore, the outputs are in the following sequence. First to finish all beginning work in process till they become finished goods, which are completed items. Second, after finishing all beginning work in process, the production can start with the new ones till we finish them. Third, the end of the period, there may be uncompleted items, which are ending work in process, which would have started in the period but not yet complete. Therefore, the examination of outputs in the period is based on the work done in accordance to the sequence above. For beginning work in process, it is the remaining work performed in the current period. For the started and complete, should have all work 100% done. And for ending work in process, work done in the period should match with progress to date. Now, let's compute the equivalent units of production. Same as the weighted average method, after we identify all relevant physical flow and percentage of completion, we can start calculating the equivalent units of production by dividing them into materials and conversion columns. For example, beginning work in process of 300 units would have 60% of raw materials completed in this period. Therefore, the equivalent units of production are 180 for materials, whereas the 80% of conversion completed in this period would provide the equivalent units of 240 for the conversion purpose. For the started and completed of 5,100 units, both materials and conversion must be 100% completed, therefore 5,100 equivalents for both materials and conversion. For the ending work in process of 900 units, 60% completed with respect to materials and 30% completed with respect to conversion. Hence, the equivalent units of production are 540, which is 900 times 60%, and 270, which is 900 times 30%, for materials and conversion respectively. Identical figures as those in the weighted average method. So the total equivalent units of materials and conversion are then summed up for each column. The total equivalent units for materials and conversion are 5,820 and 5,610 respectively. Now let's summarize the total costs incurred in the period and compute the total cost per equivalent unit. To summarize the cost, the FIFO method only accounts for the work done in the current period, therefore it only recognizes the cost incurred in the period. Different from the weighted average method, the costs associated with beginning work in process are not included in the calculation at this stage. After summarizing the costs for materials and conversion incurred in the period, we can calculate the cost per equivalent unit column by column. Materials cost per unit, equivalent unit is $20.38. That's equal to the total costs incurred in the period divided by the total equivalent unit. So we would be taking $118,621 and dividing by 5,820 units. And the conversion cost per equivalent unit is $14.46. That's equal to the total cost incurred in the period divided by the total equivalent units. So 81,130 is divided by 5,610. Now let's calculate the values of completed goods and ending work in process inventories. Completed goods. In the FIFO method, there are two types of completed goods. One from the completion of beginning work in process, and the other from those started and completed in the period. So for those completed from beginning work in process in production, cost brought forward from the previous period by the beginning work in process, together with the cost incurred in the current period to complete the beginning work in process, accounts for the full cost associated with them, are shown in the light purple colored boxes. Therefore, the FIFO method, in addition to extracting the brought forward cost by the beginning work in process, we need to compute the completion cost associated with the beginning work in process by multiplying the percentage of completion in the period and the cost per equivalent unit. This concept applies to both materials and conversion column in order to form a complete picture with full cost associated with beginning work in process, which is $17,178, which is the sum of $10,039 and $7,139. For those started and completed in the current period, same as the weighted average method. Value of materials for the completed goods, which is goods transferred out to the next process, can be obtained by multiplying the equivalent unit of completed goods and the cost per equivalent unit within the materials column, whereas the conversion cost can be done with the same mechanic by multiplying the equivalent unit of completed goods and the cost per equivalent unit within the conversion column. Consequently, we can obtain the cost of materials being $103,946 and the conversion of $73,755. Adding the cost of materials and conversion together gives us the total cost for the started and completed goods totaling $177,701. Combining the two categories of finished goods, the total value of goods transferred out is $194,879. Ending work in process. Let's do this. Similar to the started and completed goods, the value of ending work in process for the materials can be calculated by multiplying the equivalent unit of ending work in process and the cost per equivalent unit within the materials column. For relevant conversion costs, the same exercises are repeated with the same conversion column. Same exercise is repeated for the value of ending work in process, which gives rise to the value of $14,911. So let's do a cost reconciliation. In order to calculate the total cost accountable for the brought forward beginning work in process costs needs to be added. Then the total cost incurred from beginning work in process, $10,039, and incurred during the period, $199,731, totaling $209,700, should match with the sum of the inventory valuation figures arising from goods transferred out and ending work in process. Okay. Weighted average versus FIFO. There are numerous differences between the weighted average method and the FIFO methods. A direct cost comparison provides a better overview. So the tables shown here provide a line-by-line comparison, whereas the next slide will provide summarized differences. So this table provides the overview of the treatments and the differences. So now let's review losses in process costing. There are different types of losses. There are expected, which are normal losses, and unexpected, which are abnormal losses. Some losses or residuals may have scrap values, while some may not. So here are some examples of expected normal losses. In packaged canned manufacturing, parts of vegetables purchased are not suitable for consumption. Expected normal losses with scrap value. So in clothes and shirts manufacturing, parts of the fabrics are in irregular formats after trimming out the shape required, leaving some losses which may be able to sell as scrap. Unexpected abnormal losses. In packaged and canning manufacturing, the refrigerator broke down without notice and food stored inside cannot be used. So it's an abnormal loss. And then unexpected but abnormal losses with some scrap value. In shirts and clothes manufacturing, a batch of shirts being rejected due to wrong fabric being used could be sold to rejected clothing merchandisers after removing some logos. How do we value and treat different losses in process costing calculations? Well, in normal losses, it's part of the production outputs, and it is treated as part of the normal production costs for the finished items, such as it's absorbed into all products and is included in inventory valuation. In normal losses with scrap values, the scrap value is part of the expected income to offset the expense, therefore is net off from the expenses. Abnormal losses, it is part of the production outputs. It is not part of the normal production cost, therefore is expensed off separately from the production cost. It cannot be used for inventory valuation. And abnormal losses with scrap value receivable is also not part. So let's use an example. We use this information to calculate the equivalent units earlier, and here we have added the dollar amount in the beginning work in process inventory and the material and the conversion costs incurred during June. So let's begin the process of calculating the cost per equivalent unit for June. Learning objective number 10 is to understand the treatment of losses using the weighted average process costing method. Here we have the same logic and key procedures of the previous process calculations. So there are 5 key procedures. First, physical flow of units using the weighted average method. Process costing with losses follows the same logic and computation process. Losses, normal or abnormal, are part of the outputs, therefore are included in outputs calculation. Total inputs and outputs of $6,300 are the same as the one in the weighted average or FIFO methods. So 4 common outputs are completed, which means transferred out, abnormal loss, normal loss, ending work in process, and these can be traced and are handled similarly to those in the previous methods. So let's compute the equivalent units of production. This is the same calculation processes for weighted average without losses used to compute the equivalent units of production. We summarize the total cost incurred and compute the cost per equivalent unit. Scrap value receivable from normal losses normally is netting off the cost, as the loss and the income are part of the expected process. In most cases, scrap value is offsetting the material cost because the buyer is normal paying for material scrap. In some cases, conversion work done may be even reduce the value of the scrap because the conversion may make it difficult to salvage the scrap material. In this example, the scrap value of $540 reduces the cost of materials to $124,200, while the conversion cost totaling $85,050. The costs per equivalent unit are then calculated using the same principle as the one without losses, giving rise the value of $20.91 and $15 for materials and conversions respectively. Calculate the values of completed and ending work in process inventories. To calculate the values of completed goods transferred out, in cases with losses, we need to include the normal loss, which is considered as a part of the cost of manufacturing goods. That means transferred out and normal losses are added together to provide the final transferred out value. The same mechanics of multiplying the equivalent units with the cost per equivalent unit applies for completed goods transferred out. Normal loss and ending work in process within the respective materials and conversion column. After summing up the material and conversion costs, the final values for goods transferred out and ending work in process are $186,727 and $15,341. Abnormal loss is not part of inventory valuation, therefore it's excluded. Costs related to the abnormal loss items did incur and was part of a total input cost. However, abnormal loss is not part of the inventory valuation. It's treated as part of the expense. Therefore, in the cost reconciliation with abnormal loss, the total input cost of $209,250 matches the sum of the inventory values, $202,068, and the abnormal loss expense.